Ryan, if you're talking, we don't hear you, mate.
Oh, for Pete's sake, this bloody thing on Zoom, it's a wind-up, I tell you. Keep switching off onto mute. I've just done a whole 30-second spiel about that. Fuck it. Good morning, everyone. Morning, Kate.
Good morning, mate. Don't worry, Kevin. One day to go before the weekend.
Yeah, I can't bloody wait for the bloody golf to start. Right. Oh, right, that's put me all off me pace now. Right, let's get cracking. Japan's in for a treat. Trump's going to go and visit them next month. Wonder if he'll set the date for October the 4th when they're going to have their leadership vote. You won't know who to speak to by the time he gets over there. But anyway, he's off, apparently off to Japan in October. We'll see what happens then. We did get the Bank of Japan minutes out, but they were for July. So old hat, particularly given the developments at the last meeting where we've got two dissenters voting for a hike. So those opinions are pretty worthless, unless there's anything you picked out of that, Kate.
No, but it complete. We had all that info right on the Bank of Japan.
Yeah.
Already on the meeting. I haven't seen anything new in it when I read through the lines. Nothing really special
Exactly.
to mention there. I'm just gonna have to warn my son who still lives in Japan that when Trump's visit, he should not be too worried when he sees some orange glow over Tokyo. So yeah, need to warn him.
Lovely, mate. Is he still in the hotel game?
No, actually, he's in office
That's
lending
right. Yeah.
or you could like the WeWork kind of thing, but a bit more solid than that. Hmm.
Yeah. I remember. Oh, yeah. That'd be nice if he did didn't pop it up at his hotel. He might be able to get a few
Oh, I
words in.
did. Oh, we did back in the day, actually. Yeah.
Yeah. Yeah, cool. Well, I remember when I was over there. We were in Osaka,
Yeah.
on top of the is it the Yamada Tower block? You know, the one with a hole in it. And we were on the roof when Bush flew in on Air Force One. So
Oh, nice.
there you go. Or was it Obama? I can't remember. 2005. Who was in then? Was it Bush or Obama? One or the other. Anyway, we saw his plane land. That was as close as we got. Anyway,
He didn't wave to you, did he?
he might have done. It was dark. We wouldn't have
Oh,
seen him. I think he had to blind down. Anyway, that was my useless piece of information. My clang. Right, let's move on to the RBA. TD now no longer see any rate cuts coming in November and February, whereas previously they did, following that CPI data yesterday. BOE's Bailey, the governor, dropping pearls of no shit Sherlocks on us, says there's still some further journey down in rates, sounding dovish. When and how much that might happen depends on the inflation path. Yeah, thank you very much. As I say, no shit Sherlock. BOE's Green was out saying monetary policy makers have tended to look through supply shocks. I think we may need to rethink this approach. Although she said that, she then carried on the rest of the conversation about looking through supply shocks. Anyway, she said the appropriate response to uncertainty and risks we are currently facing should involve a cautious approach to rate cuts going forward. It says a more restrictive stance could mean skipping rate cuts. Risks to inflation outlook have shifted to the upside, but the risk of a weaker demand has diminished, and is also less concerned about a rapid labour market decline. So hinting that the jobs market rolling over is not necessarily something that would get her triggering into rate cuts. ECB's Casimir says the inflation goal is met and will only act if needed. So he's firmly in the middle of his victory lap. Germany's Bosch is going to cut a 5-digit number of jobs, according to Handelsblatt. That's some good news for Mr. Merz, who has been moaning the lack of faith amongst business firms. And yet again, we're still waiting for all this big defence spending to kick in. Bosch ain't waiting, they're cutting jobs. SMB, they kept their policy rate unchanged at 0%. Pretty much I wouldn't call it pointless exercise, but no ground-breaking shocks or anything from them. Weren't putting up any trees. They've marginally taken down forecasts for growth. They still see 2025 at around 1 to 1.5%. They now see 2026 just under 1%, where previously they thought it was going to be around 1 to 1.5%. Chairman Schlegel says inflation pressure is virtually unchanged compared to the previous quarter. The bar to go into negative rates is higher than for a normal rate cut, but if necessary, we are ready to use all tools. We're not speaking about reintroducing a minimum exchange rate. The situation is different to 2011. We would cut interest rates if inflation was outside the price stability range over the medium term. I always love that term, medium term, Kay, because it's a it's a rolling number.
Yeah.
6 months' time, they'll still be talking about the medium term, and 6 months have passed. But, anyway,
Exactly.
Anything from those guys?
Medium could be anything from 6 months to 6 years, perhaps. Nothing really new. He says prepared to cut further if required, prepared to intervene if required, but then he said the euro-Swiss exchange rate has not largely changed since the start of the year. The statement was completely unchanged what monetary policy was concerned, so really moving on. It's obviously if they see inflation back below zero, that I think the next step is going to be to cut into negative territory. But it does seem for him that it is a pretty high bar to go into negative rates, and equally a relatively high bar to intervene, because his line about Euro-Swiss being largely unchanged in the start of the year doesn't hint doesn't send any message saying that they are ready to step in. So yeah, I think yeah, I mean zero, zero.
Yeah.
There was a slight chance they may tweak some of their negative or factors for the reserves, being paid negative interest rates, but no, and they absolutely changed nothing at all. So I say really moving on, nothing to see there.
Despite what they keep saying about they've got it in the toolbox, do you think they are, though, actually more scared of going into negative rates than they're letting on?
It's for sure a higher bar with Schlegel than it was for with Jordan. Jordan was much more of an interventionist than Schlegel is, right? I think they really wait for it. And okay, it is in their toolbox. They are probably ready to use it when needed, but won't they, or are they not waiting for Swiss corporates to really start hammering on the fact that those higher tariffs, they are hurting them really very hard, and because the last big changes were most of the time preceded by a lot of moaning by Swiss Inc., and it's been, yeah, we hear them sporadically, but it's not been the cries that we had when Jordan was still around. So it's in the toolbox, but it's probably locked up a little better than it was with when Jordan was around.
Yeah.
They're
Still,
going to need a push.
Yeah,
They're going to need a push in the back to really go for it.
yeah. I still find the whole situation really quite strange and interesting. That they never saw the inflation blip that everyone else saw. They never saw the growth that everyone else saw, and it all petered out what they did see pretty quickly. And it's, they're in the same position that everyone else was in 2008 through to 2012, 2013, that sort of thing. But yeah, very strange situation. But there we go. Right, let's have a look at some of the data we got yesterday from the US. Not a lot, but a decent jump in new home sales. 800,000. That print was expected to come in at 650,000, which was below the prior month, though that was an upward revision. Still, as I say, a very decent, as you can see there, 20.5% gain. So once again, we're seeing some data coming out that's still looking pretty good. The other housing numbers were a little bit iffy. Starts and permits were down a little bit. Again, no yellow flags being waved, but things are still moving on track. Prices holding up. Oh, excuse me, little sneeze. Prices holding up as well. They're up 1.9%. From this time last year as well, so pretty good as well. Fed's daily, she's perking up for the second time this week, and since the FOMC says further policy adjustments are likely needed, fully supported the 25 pip cut last week. Projections for additional rate cuts are not promises. The labour market has slowed and inflation is up less than expected. Hard to say if further rate cuts will come now or later this year. The recent rate cut was like insurance on the labour market. I'd like someone to draw me a line between how a 25 pip cut is going to get stop the labour market from potentially collapsing, but there you go. Treasury Secretary Besant is going to hold a lot of Fed interviews next week. He also doesn't know if there'll be a government shutdown next week. And he says that they will be meeting again with China in October. Just on the shutdown stuff, I did put a little note in our chat room, in our newsroom, and Blake added to that as well with a piece on what happens in a shutdown. And what for us as traders, it just becomes a real pain in the arse if federal stats offices are all closed and that we don't get jobs numbers, we don't get the economic data numbers, and then it takes months to filter that all out and get that all out down the line. It just becomes a right pain in the arse. On top of that, apparently Mr. Trump is going to use the furlough to sack off hundreds of thousands of government workers. So that's going to be an even bigger shit show on top of the shutdown shit show. I'm keeping my fingers crossed that we don't actually get a shutdown, because I just don't want to deal with the aftermath of it from a trading standpoint, because it just throws everything out. It throws the Fed out, it throws data out, and if it's prolonged, that is, if it's a 5-day thing, that's a different kettle of fish. But if it goes on like the last one, for over a month, it really just becomes a big old pain in the arse. The Kremlin says they finally perked up after Trump's little dig. Says the process of normalising relations with the US is moving much slower than we would like. Well, according to everyone, the ball's in their court. Russia wants to accelerate work to remove irritants in ties with the US. And speaking directly about Trump's truth bomb, they say this is not an aimless war. And that the idea that Ukraine can win something back is deeply mistaken. Now, just before the show kicked off, Axios dropped an interview with Zelensky, which they titled "Russian Officials Must End the War or Find Bomb Shelters." Within that, apparently Zelensky spoke to Trump about getting a weapon that will potentially stop the war, even if it's a weapon they would never look to use. I'll give you 3 guesses what he was talking about. The fact that we're talking in those terms could mean that we might get a little bit of step up in rhetoric. But yeah, that's something that no doubt the Kremlin will look to comment about. So just be forewarned about that. I'm going to call it as it is. It looks like Russia's playing games at the moment, particularly in Denmark. Lots of drones have been spotted over airports and military bases and the like. Yeah, call it for what it is. I don't think it's kids playing around. So this is just more Putin stuff, just becoming a little annoying gnat, shall we say. Anyway, that's that. Kay, any comment on any of that lot?
Just an interesting little line Michael Brown posted in our chat room just a minute or just a couple of minutes ago that Goldman Sachs reckons that a shutdown would hit the US GDP by about 15 basis points every week, with a recovery of the same magnitude in the subsequent quarter. Um, the problem is, though, that if Trump really makes hard of what he's trying to do, and that is not furlough people, but just get rid of them, I think it may be a bit of it may have a harder impact if it drags on and if we get a shutdown. I do think we need to pay a bit of attention to how things will develop if ever they go into a shutdown. It can have a bit of an impact on the US and maybe risk their equity markets also per correlation. So I think we need to be a bit attentive to what's going to happen there. But for the rest, man, no, there's not really anything market moving that came out overnight, right? I agree with you on that Ukraine-Russia situation. It seems that Zelensky now wants to push for it to come to an end and go head to head with Putin once and for all. That's obviously another factor to take into account, and likely also what is keeping those metals up today again.
Yeah, very much so. Well, it doesn't take much to keep metals up at the moment.
What a beach ball that was in! What a beach ball that was in silver! Incredible. I mean, corrects like $0.50 and then shoots up more than a buck in a few hours. So
Yeah,
it's
a bit
yes.
like what gold did the other day.
Exactly. Yeah.
That right in there.
Exactly. I think it's a lot of, you know, I've been saying that. I mean, it's got so many uses and whatever, but I did read somewhere that to build drones you need silver as well. So and since there is a shortage of supply in that stuff, that is what we are seeing. And then gold, yeah, is still a hedge against everything that can go badly. Maybe this thing is trading. I'm not going to say 4,000 going into the weekend, but we may need another extension to what we are seeing right here.
Yeah, and Fred's asking a question. Do we reckon it will be a signal to sell the S&P if a shutdown is confirmed? Right, Fred, you're in our chat room. We had a big old discussion about that, which you can do a search on for yesterday. And I commissioned some statistics from my mate Michael Brown, who gave us, there it is. This is what happened a day in SPX when a shutdown became inevitable. So not necessarily the day the government shut down, but when all hope of it not shutting down was quashed. As you can see, not exactly huge moves going on there. You've got to remember also different times. 2018, we were in the middle of the Fed hiking rates and talking about QT and all that sort of stuff. So different conditions at different times. But the aftermath, i.e. the protracted moves in stock markets during the shutdown have been pretty minimal. So yes, could stocks have a little wobble if it becomes confirmed that they're going to shut down? Absolutely. How much that will be is another question, because the world will still turn. But going on to Michael's point, also in the chat room, that's the bit there, a 15 basis point hit to GDP every week. Yes, and one of the reasons why you'll get that is because there's many firms who have government contracts who effectively probably won't get paid for the period of the shutdown or any new work going through. So that is why you suddenly get a hit to GDP, because government contracts just basically come to a halt. And if you're a business reliant on a government contract, you ain't going to be doing any business while they're shut down. And that means you might have to get rid of workers, put them on furlough or all things like that. So there's plenty of knock-on effects from this, why you get a short-term impact. The question will be, do we get a bounce back of the same magnitude, or is the shutdown just going to be something that kicks the can over or kicks the dominoes over in the rest of the economy that might just be on the edge of turning one way or another? So it's going to be potentially big stuff, the ramifications from such a shutdown. Right, let's get rid of that. Right, I think that's it from the news. Yeah, you've not got anything else, did you, Kay?
No, just a lot to come this afternoon. But if you look at it, barring really the jobless claims, the rest is durable goods haven't really moved the market too much. Maybe the PCE prices a little bit, but that's then the rest is all Q2. I mean, we're nearly at the end of Q3. So.
Yeah, exactly. So yeah, that GDP is a final number. I think it's a final number anyway. They like to have about 30 goes at guessing it. Really, the only thing that might move the market a bit is if there is a big variation, and more probably if there's a big downside variation, if growth drops to 1.5% or something, which is not very likely. As I say, they've been refining this over the last few months. Durable goods, yeah, it's only volatile if we get a big move in sort of the consumer related, the smaller ticket items, not aircraft, defence, and all that sort of stuff. And we have seen some volatility going through that over the last few months. So, yeah, might be a mover, might be not, depends on the numbers. Yeah, and these PC numbers, they're Q2 numbers. Again, old hat. We're going to get PC tomorrow, which is, again, the Vol vampires sucked it to death because Powell's given us the numbers, and yet we get a ton more Fed heads speaking today. Whoopee! And then some existing home sales later. Another look there. Right, that's all we need to look at. Oh, we have got some auctions later, but we'll see if anything comes over. The others thus far have been pretty decent. Right, what's going on in markets? Where shall I go this time? We're on the cusp of a break, or possible break, and if you haven't seen Blake and Westy's trade-off, I might need to hand Westy a Jinx card because he's talking about trading a break up above this area in dollar yen for his play of the day. And here we are, can't get through it. So yeah, I might have to send him a Jinx card. But yeah, we've got to move up here. It's had a little nose through. It's not getting through. It's not getting through. The only difference, and this is very minor at the moment, the only difference between this one is that we're not dipping back too far. Some of these other tests, they've come off pretty quickly and seen, quite decent moves, quite decent pullbacks when we fail to get above there. This one's a bit different. We're just hanging around a bit, but I'm not going to get too excited over a few hourly candles. So yeah, if we go through, maybe we've got a bit of a runner. But unless we confirm above this level, i.e. retest it and hold it as support, which we haven't managed to do for any real length of time, but all the other prior tests, then there's a risk of another fake out. I'm obviously still a bit long in this one. Happy just to sit here and ride it and see where it wants to go. But yeah, we could possibly on for a bit of a break, and then we have to see where it wants to go into 149s, maybe up towards this prior high. There's going to be some various little traffic points on the way, 149.20s, maybe this old fib, 45.50, but otherwise nothing gets thicker until we're up into the 150s and knocking around some of these levels up here. Kay, can you see a break coming in this one?
I can, yeah. Especially maybe in the run-up to the elections. Obviously, I know we talk about that a bit too often, perhaps. Obviously, we still have like end of month, end of quarter, and looking at the expectations, some say global dollar selling, but I don't think that there is too much to sell in the end myself. Just looking at what the Nikkei and topics have been doing this month, I don't think there's going to be too many yen buyers buying to be done. But okay, never say never. But yeah, otherwise, I mean, look at the yen crosses. That's what I always say. I mean, they're beat. I'm actually a bit more long in the yen crosses than the dollar yen right now. Because just yeah, I think over month end there may be a bit of action there as well. But um, up to the 4th of October, yeah, I think yen will remain under the cush. Yeah, and I just can't see it change materially right now, unless there is something going on that shutdown, which all of a sudden wakes up all those equity longs and sends risk a leg lower, which then may be somewhere weighing on yen pairs. But right now, I mean, first things first, and it's yen is offered. Yen is just offered for the time being.
Yeah, I mean, a lot of people are looking at stocks for what happens on a shutdown. What do you think the dollar does? Do we see the dollar softening a bit on that? I mean, it knows the threat's already there. It doesn't look like it's trading
Mm,
it, but is
no,
this one of those moments where maybe it's a bit complacent, that the can will get kicked and
yeah,
it will only react once
I
it knows
mm,
it's not?
yeah, I think the first thing the correlation, if it weighs on, let's say if it weighs on equity markets, the first thing that's going to happen is that all those correlation algos are probably going to be forced buying dollars, but that's not the right direction for me. If it starts to weigh on the GDP, even with risk coming down, the dollar should not be a safe haven. That's my view anyway. And then the dollar will get a knock on the head, in my opinion. But again, we've seen of late that yen has not really been trading on the back of risk. Yes, the yen is weaker. We could say it's correlated to risk because equity markets are at such high levels. Yeah, but I think there's much more or different things going on in the yen as well, like interest rate differentials, etc. And also the political outlook. So it may react at first. Yen pairs coming down, but will it stay low? I'm not sure. I'm not sure, especially not if Takahaichi gets it. I mean, Abe version 2, I think the yen will be in for a prolonged period of weakness if she gets it.
Yeah, yeah. And Galaxy says they won't likely publish the BLS jobs data next week, especially if soft. Well, if it's shut down, they won't be publishing it, whether it's soft or strong, unless Mr. Trump wants to pay people to
Mm,
avoid the shutdown. Because I think there are little intricacies where certain departments can be kept open and whatever. You know, things like pension payments, claims, jobless claims, that sort of thing. They all still function. They all still get paid. But it's other stuff, discretionary stuff, that goes on hold. But yeah, we probably won't get data one way or the other, depending on the date of the shutdown, which will be a pain because September numbers, i.e., the NFP we're going to get in October, is potentially going to be the first report where we actually see the government jobs that were touted as being cut under Doge in the early part of the year. That's why it's going to make this an absolute mess, because we could have that coming through and we don't know about it, and then a ton more going through that we don't know about. So yeah, it could be an absolute mess. We could get a like a minus 600 NFPK if he cuts workers and all the other ones come through.
crazy,
And that, well,
crazy.
we might.
I just can't get my head around it because he's such a person and politician who wants to let first of all his own people and then the world know how well he's doing and how good everything goes. But then since the start with that Dodge thing, and now getting rid of wanting to get rid of people instead of furloughing them, and it's crazy the kind of things he comes up with, and if, yeah, I sometimes I just wonder what the aim is. What's what does he want to achieve, really? I mean, if you want to keep your people happy and being seen as one of the best presidents in history of the United States, as he calls himself, I mean, don't don't sack everybody, do you? I
Yeah,
mean, I sometimes I really wonder what's going on there for real. Yeah, okay, you can always say, and that's the how shall I say, the thing that if you're an investor and you go like yeah, Brand said, like a smaller government and stuff like that. If you cut costs by firing a lot of people, most of the time investors actually like it. But so the only thing it could potentially do is create an even bigger gap between those who haven't anything and those who have. Um, and then yeah, I mean that's probably going to be the only result. We know that he's a businessman, so he likes the rich to like him and investors to like him more than the people in the street. But unfortunately, but I I I don't get the aim of things to the finality. I don't get it. I just don't get it.
yeah, yeah. And just a last thought on the next jobs report to come. I think, if I'm not mistaken, it was Michael who put this forward as well. There is a potential, possible rumour that the BLS, if we are to see those government jobs from early in the year coming in, they're going to put them in as a separate category in that jobs report. So we always get private payrolls, government payrolls, manufacturing payrolls that make up the total NFP, but that government number may be split, just to clarify what's what within it. But anyway, we won't know about that until we get to the data, if we get there at all. Right, next one. Time's ticking. Euro dollar. Blake likes to talk about, or Dale likes to talk about, how tech can be amazing and how coloured lines in a chart can be amazing. Well, here we've got it going on again. This 1750, we can't get through it. We got above it. We just tried staying above it. We failed. We got above. We below. Now we're struggling to get back through it. And if we can't get through there, you can forget about 119s again or anything like that. There's more chance of going down to 117 or maybe even more. Depending on what the market wants to do with this. But this is becoming a very decent pivot level to base your direction off, just at least in the short term intraday. So if we ain't getting through there, chances are that we're going to be heading lower. A pair that is making the break and looking good for holding that break is dollar CAD. We got through my level here. We had a little one touch on the level confirmation there. Then we've got above this 80s level, which just a little bit of an extension area that we've seen previously. We've had a little dip to there, couldn't get close, so that's another bullish signal. But we're not far above, and we can't get through 139s and stay there. So this one's still not really confirming a push higher, but it looks, this move here looks particularly bullish for this breakup, just holding that level there. So if we keep the pressure on, if we're not dipping back down there, the chances of a break up are increasing for this one. And the last one I'm going to talk about is dollar MEX. I know a lot of people in our room are watching it. I did put a bit of analysis out earlier. There's two things that can really happen to this. Obviously, there's more, but experience says this is what could happen. We get a pretty quick move up to 1850, and everyone's looking at this number. It holds and it keeps us in range, and anyone who wants to short that level potentially has a good trade. Or we get a bit of a grind up, and that would increase the possibility that we get a break move rather than a hold move. It can still hold, it can still go down, but just looking at, to say, how watching price action, how it works sometimes, that sort of move raises the possibility of seeing a break. So if you're looking at shorting this level, this sort of move is the one you could probably put a bit more conviction into. This sort of move is one that you probably put less conviction into. Certainly I would, and maybe you do a smaller trade just because of that different risk. But otherwise, this one is just in the box Just waiting and see. Kay, I don't know when the next round of USMCA kicks off.
No,
I think there's something coming next week, isn't
no,
there?
no, no. It's coming, but I haven't seen anywhere a date planned unless I missed it. No, but it's for sure coming. That has been announced, right? That they will soon start to revise it. So it's quite funny because we used to have that. What is it? The NAFTA, which has been changed in USMCA by Mr. Trump, by the way,
Yeah.
and now he wants to
Oh, we
throw it.
might get a new one.
He wants to throw it all in the bin and start a new one.
Yeah, we can get a new one. The CUSMA, CUSMA. There
Yeah,
we go.
that's how the Canadians call it. Huh? They put
Yeah.
Canada first. Huh? Kuzma.
Or the Muska, whatever. Anyway, so that might be coming up. So this could just be that we're in a bit of wait and see. Well, it looks like we're in wait and see mode in this Dolomex. But yeah, an 1850 test is probably going to be interesting one way or another.
Has
Right,
to
I'm
be.
going to pass it. Yeah, go on, mate.
Has to be, yeah. Has to be interesting in 1850. Yeah, it's spent so long trying to get below and people taking back positions there, and yeah, it has to be. Yeah,
Yeah,
has to be
yeah. So it
important. Yeah.
should be big one
Okay.
way or another.
Um,
Right,
yeah,
I'm going to pass it over.
yeah, and I'm quickly going to go back to what Ali was saying. Look, Euro Swiss, I still have absolutely no interest. We we had the SMB, it came, it went. The one door that is still a bit interesting in my opinion is that first of all, we have this big slide, okay, which is you can go on longer term time frames. We are still very much in a downtrend in the dollar Swiss in the longer term, right? But then coming a bit closer to home, you can put this line wherever you want. This one it could have been there with a breakdown, and some people may call this a false breakdown, perhaps also if you do it like this. But anyway, still we are in this downward channel. So for this to turn around, despite all the recovery that we've seen in the dollar so far, which has also been the case in dollar Swiss, because euro Swiss indeed did not move much. It's for this to reverse higher, it's going to have to break above 80. And already in between, if you look left here and here and here and here and all around here and here again and here again, this 79.80, 79.985 has already been playing up. So for this to really trade higher, we're going to have to get through 80, and there's already a little bit of a buffer here around 79.80, 85. Okay, so I just wanted to show this. Um, just in case we see some moves over month end, etc., is that despite all this recovery, and people are talking now that the downside of the dollar is done, whatever. If you look at this thing like dollar Swiss, it is still very much in that downward channel, right? So before we can really talk about a reversal coming, this should actually break here. So for those who but I would argue you could do euro dollar as well, because euro Swiss doesn't move. But for those who want to play the dollar either side, keep an eye on this one, because for as long as we don't really break above, there's very little chance that actually it's we're talking about a reversal, and actually the bigger chance would be that we see a retest and then start to come off again. Okay. Um, Moving on to what's happened in those metals, because it's been impressive again, right? Just going to go onto the 1 hour. So yesterday, and Fred was saying we had a nasty breakdown. Well, yesterday I was really talking about that, right? And I said, well, looking at the dollar as well in one way, gold didn't really react, but it was building it was taking a bit of a breather. But then once we went below 37 and a half, and I pretty luckily sold mine out and thinking it may start to happen around here somewhere. Um, it did actually go down, but then even on the short term, if you look at the first decent kind of support, where decent kind of support could have been coming in, which is halfway of this of only the latest move higher, and forget about all the rest here, but only the latest move higher, we didn't get to down to the 50%, and buyers stepped in straight away. Okay, yeah, we are on perhaps a little bit of a zone where it could resist a bit here. Um, Around at 37.65. But that move here, and all the metals have been trading higher again, should still tell us that we may not be done with this move. Okay, I mean, it is still, because we have seen those kind of corrections. We have a legion of corrections like that in the past, but most of the time they have been met by with buyers again. And yes, there is some use for gold as well, but then also, and it's not really that China thing from yesterday or the day before yesterday where we had this blip higher. I don't think it's that China thing, because it's just like a transfer of gold, actually. Maybe it's more like an insurance thing than a gold thing. But it's just that metals are still remaining big. But if you think about what Zelensky, for instance, said, that Ryan reported earlier upon, that he's seeking for perhaps going a head to head with Putin once and for all, that is something that it could push gold even higher ahead of this weekend, if we don't get any news before. But Putin will have heard that, and he's probably not going to be happy. And as also said before, sending all those drones over NATO countries is one of those things that he may accelerate right now, and trying to really get NATO or the European Union out of their box, and get more involved. And in which case, this is probably going to go up to the next leg here, which is waiting around 3880, and then obviously we're going to talk about 4000. So for as long as we are seeing this kind of thing happening, there's absolutely no reason to get bearish on it. Okay, yes, the corrections are here, yes, but getting bearish on it, no way. I think for as long as we are above 3600, even this can't really, I can't really force myself to play any corrections in this. I'm rather still buying dips, unless we start to get below 37, and then see what happening here in this zone. Okay, and then the other one, of course, that beach ball silver. We have seen this kind of move last week, and we were talking about this in the room as well. As I say, I mean, it's got this use, and unfortunately, it's used for drones, etc., as well. And there's a heap of them flying around, right? So and then there is a bit of a shortage of supply, which was reported again last week, which sparked this initial rally. I think it's just a continuation of what's happening here. People are taking a breather, waiting to see if they can get them, those who need them, cheaper. They don't, so you go to market, and yeah, and you start buying again. This is still looking extremely big, and we are coming into that next extremely, I think for me at least, a very important level, which is around here, which is the 88.6 of the whole move lower from 2011, and that is at around 45.50. Okay, so that I think is going to be an interesting one to look at it technically. But if you look at how explosive this is, it may be that we straight away go to 50. I actually, looking at the speed by which it went up again today, I had my order in just to take profit on the rest of my really long terms, but I took the order out. It's just going too fast. I'm just raising my trading stop in case we start to correct more, but I've taken my order out because this is looking scarily bit, this one. Okay, we've got data this afternoon out of the US, even though a lot of them is backward looking, and durables need to show something really spectacular to move the needle. But we know those claims, okay? And then we are in a period where the dollar is doing relatively okay. So cable is one when you look at euro sterling still being relatively big, cable is one that has suffered a little bit, but the range has tightened. Okay, so yesterday we didn't do much actually, but we are trading below this trend line here, and that comes in at around 134.65, which was also a level around which it been hesitating in the past as well as we've seen. So this is your first level that you need to keep an eye on when those US data will come out, 134.65. If the data are a bit worse, we could get up to 135 and then perhaps push a bit higher. But we have been struggling above that 135, okay? So for as long as it's below 135.40, I wouldn't go all gangbusters long cable. Maybe play the stuff, but don't forget that this level here, it's been struggling. On the other hand, if we get stronger than expected US data, cable is probably one candidate together with Kiwi, for instance, that could trade quite a bit lower and go for a test of this big. I know we had spikes below talking about that, but it's still a big level. I think 133.65.90 still going to be a big zone to pay attention to. So in case of stronger US data, this could be a pair that feels pretty heavy. Together with the Kiwi, yesterday we saw a test close to 58 the figure. 58 the figure is important, guys, okay? Because if it goes, that could set another 1% in Kiwi terms in motion. But yesterday we held just above, and we are trying to correct a little bit. We're trading around 58 and a quarter now, but it's put in another ahead even of the 58 three quarters. It's put in another little intraday level here, which could now already be resistance. So this is also one of the weaker sisters compared to Aussie, for instance, which is just doing better than the Kiwi still. And we have this whole zone every 10 points or so down to 65.5 to reckon with on the Aussie dollar. Okay, I think this is still one of the better ones. If we get a bit weaker data out of the US, it could get back up for a test 66 and a quarter, 66.40. But also that will need to give way to continue to push higher. Okay, so we have a few decent things to trade going into those data this afternoon, perhaps. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good stuff as always. And that brings us to the end of yet another show. Take care for the rest of the day. Watch those markets. See what headlines and stuff drops on us later. Take care, everybody. We'll see you tomorrow.